I'm looking at futures showing some red ink, but again, not much. S&P is actually dead flat. All right, Eddie, here he is. He's back. All right, Eddie, you're the man in the hot seat today. I got to tell you, Eddie, if I was one of your clients, I would be worried that I missed a 15% bounce because you've been telling everybody, get out of the market and stay out for a long time. I missed the bounce if I followed your advice.
You only missed the bounce if you sold at the end of June. So it's all relative in regards to when you started reducing risk. And look, our clients appreciate the fact that we haven't sugarcoated this market and where it was heading. We sent out warning signs in November, and now we're preparing for a global recession. That is where we're heading right now. Europe is in serious trouble. China's no COVID policy is a problem. And here domestically now, we have a dollar that is ripping to highs. That's going to be very problematic for these multinationals. They're going to have to bring earning revisions are going to be coming down. And now look at nat gas and oil. The Fed is going to put cold water on this narrative that they're going to pivot. They cannot pivot because if they do, inflation's only going to get worse. So we are going to head into a recession into this winter, and we will have an opportunity to get back in this market. But I think September and October are setting up to be very volatile.
Yeah, that's what I wanted to ask you about. Last time you were on, you were saying that, look, we're looking at, expecting a big drop in the month of October, which is traditionally the month of big drops. You're still looking for an October slide, shall we put it like that?
Yeah, and I think it's going to start more in September. Again, I mean, if you look at these retail earnings, they're telling you and telegraphing what the consumer is doing and what the consumer behavior is doing. And again, I can't stress enough this strong dollar. And now look at interest rates. I think the 10-year could certainly go back to 3.25% by October. And we know what normally happens when we get that rip on the 10-year. Because again, the Fed is going to raise rates more aggressively than what the market's pricing in. And I want to also hit this narrative of people saying, well, the Fed's going to cut rates and that's bullish. That's not bullish. The Fed only cuts rates when the economy and market is in the tank. So if you think the Fed is going to cut rates, basically you're agreeing with me that things are going to get worse before they get better.
I'll tell you one thing, Eddie Ghabour, you are consistent and you stick with your theme and your strategy and you're still sticking with it now. We appreciate that. Eddie, come back soon, okay? Keep us up to date.
Yes, sir.